All right, let's do it.
Broadcast, yeah. YouTube, what up? Hold on one sec.
YouTube was popping. We're about to get into it. What I got, Ian Dunlap, the Master Investor. This is exciting. This is our first episode of Market Mondays, new show that we're going to be doing every single Monday at 8 p.m. Eastern Standard Time with Ian. And it's going to be a whole vibe. We're going to be going over stock market, latest trends, what's happening in the economy, stock market tips. And it's really dope because it's a question and answer situation. So, it's interactive. So as I said on Instagram a few weeks ago, we're going to look to start publishing shows and producing shows. So this is our first venture and collaboration. And especially, we thought it'd be dope to do it with somebody that was actually on the podcast. So this is the first one. Hopefully we have a few more in the works. So we're gonna be doing it on different platforms and different things. So this is the first one we felt for stocks. It would be perfect to do on the live and to have it on YouTube. So yeah, we're excited. We're about to get into it. We're calling it Ian right now. So you guys, how it's gonna work is that once again, we got EYL University. Shout out to all EYL University students in the building. You guys have the video access. You can ask questions, and then the YouTube. You guys can ask questions on YouTube as well. What's up, brother? What's going on?
Can you hear me now?
Yeah,
we got you good. We hear you good.
Yeah. What's up, man? You got a haircut in the quarantine?
Bro, had to get a Corona cut. I was tired of wolfing.
I see it.
I was tired of it. I couldn't do it. Caesar. Boy, I was tired of having it. So, yeah. Y'all having a good day?
Yeah, we've been good, man.
Yeah, everything good. It's crazy out there. How's it in Texas? How's the whole? Is it bad out there? I know it's not as bad as it is in New York, obviously.
No, it's not as bad, but it's getting worse. It's starting to peak up a little bit. So I think our peak will hit in about 2 to 3 weeks.
Oh, wow.
So, yeah, so it's still, people still out, unfortunately. So
I saw yesterday on the news, it obviously was Easter Sunday. They had service in the parking lot. I saw people pull up with their cars just having Easter service, man.
I'm on. I mean,
Houston real, man. Texas real.
Yeah. So, I mean, you can't start religion and football here.
Not in Texas.
Not at all.
Some things will not be stopped. Yeah, man. It was interesting to see, man. But thanks for being here.
Yeah, so we want to we just give a little background. So now that we got you on, we'll give the full. So this is our first collaboration show that we're doing outside of the normal, podcast, and I think this is really dope. So I was telling the people that it's a weekly interactive show, and it's different because the podcast is not interactive. Obviously, the podcast is taped, and then it comes out, and it's not the same. So it's like this is a dope experience for us. And I'm pretty sure it'll be a dope experience for all of the viewers and people that check us out as well. Whereas this is a real-time education, engagement, and I thought stocks would be a perfect topic to start off with because stocks, more than anything, move so quickly. And it's not like you could read a book about stocks last year and you're good now. Like you have to constantly, it's like a sport, like you have to constantly stay engaged.
Absolutely.
And for me personally, at least, like I like to learn via people having conversations. It's a lot easier for me to learn via conversations and hearing things as opposed to like reading a book and stuff like that. So this is what this is, weekly education with Ian. So
Market Mondays, man. So shout out, I see there's some Red Panda family in here. Shout out to all the earners that are in here.
Red Panda family. Yeah, and thank y'all for the dope name. As soon as I put the name out there, I was like, yes. Wrong with that, I'm like, all right, cool, let's do it.
Nah, so first and foremost, man, thank you for being our first produced show on.
Thank you for having me. I appreciate it. Thanks for having you guys have had some superstars on the show. So to do it with me, I'm honored. I feel like Bleak getting to drop his album before Jay or something.
This is the coming of age in real life.
What better numbers? Shout out to Bleak.
Yeah, sure. So All right, so yeah, we're gonna get right into it. So once again, we're gonna be answering questions from Zoom. We're gonna be answering questions from YouTube. But before we start with the questions, I had a couple things I wanted to ask. I'm pretty sure Troy does.
Yeah, I got a list.
So first and foremost, we had a crazy week in the market last week. It was the best, I believe, the best performing week for the market since 1944.
Yep.
So the reason why that's really interesting for a lot of people is that unemployment numbers were at an all-time high right now. Well, not all-time high, but like for the week. For the week, it was an all-time high, and it's not getting any better. It's actually on pace to potentially be the all-time worst unemployment number. So
at this rate,
businesses are still closed. The economy is still closed. Nothing is really open. So it's kind of puzzling that the stock market went up so crazy. So we actually talked about a little bit on our next podcast that's coming out tomorrow. But I want to give your take. I want to get your take because a lot of people feel the stock market is going to crash again. But then I was reading today with Goldman Sachs. I don't know if you saw that, but Goldman Sachs issued a statement saying that the worst is behind us, and it's a good time to buy stocks because we already hit the bottom. So what's your take on what's going on right now?
The stock market and the economy, especially for Black people, are two different economic engines. That's simple. So the stock market is comprised of hedge funds and wealthy families, and then us retail investors that jump in. So remember when we had to talk 3 weeks ago or 4 weeks ago, now you guys were like, how much do they need to put in the market for us to go? I was like, 7 trillion. It sounded crazy. And then they put 2 trillion in last week. And then, so they're going to take care of that economy. They're going to take care of JP Morgan first, going to take care of Goldman, because this is really corporate welfare. Regardless of how you slice it, it's corporate welfare. So that is going to rise. So when I say the market is rigged to stay up, I'm talking about quantitative easing. So now we get to see they're pumping money constantly. And I made a joke earlier on our chat earlier. I was like, you know, when you mess up with your girl and then you got to go extra hard with the gifts, baby, I'm going to do better. You come with some Louboutins and flowers and now you're stepping your game up. That's what the Fed is doing.
So you say it doesn't even matter if the economy's not open, if airplanes are not flying, hotels are not taking gas. It doesn't matter. The money's being pumped in, it's going to go up.
Nope. And that's what I went back to our original conversation when we did the podcast. Index fund and tech. And everybody killed it for me. And what is their well today? Tesla, tech, Amazon, tech, Apple, Bay, tech, Microsoft. Everything else is remaining flat or they're dropping down. Boeing is still on the upside, especially from where you got in. But I keep telling people the powerhouses are going to take care of us. Amazon about to break all-time high in probably 2 months. And the worst economy that we've seen in a long time. So they're two different things. And that's why I scream to everyone, invest every month. You can't time the market. It's like you wanted to play in the finals against LeBron and your first day back from playing, you haven't played 5 years. Like, invest every month. It'll be a lot easier for you.
So talking about Tesla, they went up 14% today. The auto industry obviously is tanking, but you know Tesla doesn't consider itself an auto company.
It's a tech company.
It's a tech company. What can contribute to the rise today?
Combination of popularity, Elon, the revenue numbers are good. And then there's few places. So I want everyone to think of companies like a player. There are very few players in the market right now that are producing. That's one of them. You're going to see all the hedge funds run to tech first. Amazon killed it. Tesla killed it. Microsoft. Like, you don't need 55 companies. Revenue's good. Popular car. And probably within 14 months, Tesla probably at 1,100.
So what's your take on, because I personally still believe that we haven't, well, I don't know if we hit the bottom or not, but I think stock market still has to come down eventually because no matter how much money the Fed pumps into it, it's like stilts. Like, you can't run a marathon on stilts. Like, you can walk a little bit, but eventually the stilts got to come crumbling down. But like I said, I mean, Goldman Sachs, obviously they know what they're talking about. I mean, you know, it's a trillion. So what do you think that we hit a bottom, or?
We're going to see a lot of companies that were not operating as good businesses get torn apart and eventually go out of business. And then new companies will replace them, like the last recession. So we got Uber, Facebook, Airbnb. It'll be a whole crop of new companies that pop up, and ones that were not managing well are going to get devastated, like Ford, GE. And I think Ford is a good company. It's a bad stock. So we can't have any bias towards who's going to do well. But will the market come back down? We'll slide back down some, but the companies that are good, like the great companies, are going to shine in this market because everyone's going to run to them. And then, think about us. We have a little bit of a cushion financially. We aren't as worried. Imagine how you think Bezos feels. They have enough money to run Amazon probably for the next 10, 15 years. They're hiring people. They hire 7,000 people.
I posted that on Early Leisure today where the Google, well, they didn't even say Amazon, but Google, Apple, Facebook, and what company?
It was Amazon.
No, it wasn't Amazon. But no, I know that. But it was an article today that those four of the top tech companies are hiring. And Facebook actually announced. That's why I said Facebook was the company.
Apple, Google, Amazon, Facebook.
Yeah, Facebook announced that they're going to hire 10,000 new employees by the end of this year. So there's still jobs being hired, and those jobs, engineers, coders, tech, they're all tech jobs. The tech industry, and like I said, this is what I said before, as far as like tech, you really can't destroy tech because even if everybody stays in their house all day, they're on some kind of tech device and they're using one of these tech companies. So like you said, I mean, when you talk about investing, like the safe plays, that's kind of like a no-brainer.
Yep. Rinse and repeat over and over again. And I know people want to diversify, but the same, like LeBron has been good since he came in the league. Zion will probably be good the entire time he's in the league if his weight's under control. Like there are certain companies that are just going to dominate year in. And that's why, like I told some of my students in my program today, go look at Apple back in 93 and 94 and go look at Microsoft back from 99. Microsoft has been a company through and through, whether they were popular or not. And there's been a debate whether, I mean, we can get into the Gates thing if you guys want to, but like as an entrepreneur, Gates was a great entrepreneur. Also had 15% of Apple as an investor when Steve Jobs came back. Like you don't need 58 companies. Now, as far as Royal Caribbean, my stance has been clear. Until the ships can move off the docks, it's a drought.
Yeah, I saw they just suspended them till May, right? There's 100 ships on the east and west coast that cannot move right now.
They cannot move. So why would you want to put money? And I get to thinking you want to buy it at a low and hope that it goes up, but it's like it wasn't a great company before then. So rinse and repeat.
Dana, appreciate you on the super chat. We appreciate that. Can we get some questions from
we got Zoom
video? If you have a question on Zoom, please do the video conference. It makes it a lot easier for us to do it. That's why UIL University members have that access. I wanted to ask you another question. So
really quick. So Zoom, y'all know, if y'all raise your hand, that makes it a lot easier for us to see it. And when we come to you, the mic is yours.
Yeah, if you're on Zoom, if you want to ask a question, do not type it. Please raise your hand, and then we can come to you. Then you can like talk. That's the whole point of it. So I saw you put on Instagram the Fear and Greed Index. Right?
Yeah.
You want to go to that question first, or we'll go to this question first, then we'll get back to that.
This is Darian. Darian, the floor is yours. We'll allow you to talk, and you are unmuted, Darian.
Darian, what's going on? What's going on?
How are you, my brother?
He got to unmute himself.
Yes,
unmute yourself, Darian.
All right, I got it.
All right. What's up, bro?
All right, thanks. First and foremost, I want to thank you guys for having the meeting. On your leisure in the red playing the stock market. I just want to ask a question about what Ian thinks about Union Pacific.
Give me the ticker.
Oh, hold on. It's in my book. It is.
Go to the boards.
It's UNI.
UNI.
Right.
I asked about this earlier. Give me a second. UNI?
Yes.
It's not coming up. But give me a second. I'll come back to it.
Okay.
Thank you.
Well, you look up Union Pacific. He said Union Pacific.
Yeah.
The ticker. All right. So we're gonna get the ticker.
Yeah. Once we get it, we'll come back to you, man.
We're gonna get the ticker on that.
I'm gonna come back to you. He said it's UNP.
Somebody said it's UNP. Is it UNP?
Yeah. Yeah.
We got it. Thank you for that.
Thanks, Daniel.
It's not bad. I don't love it. 146 is too high. You can get it at 128 or 130. I don't love it. If you're already in it, to hold it. If you've been in for a year, hold it.
All right. Thank you.
Thank you. Thank you.
Good luck, Darren.
Yeah, Ian, one other, so what we're saying is that the fear greed index, what is that?
Yeah, man. You've been posting a lot about that. I've been trying to figure it out.
It's the easiest indicator ever that you can use to tell when you should buy. So we are here, buy low, sell high. You should buy when people are fearful and sell when others are greedy, right? The fear and greed index tells you exactly when people are the most greedy and when they're the most fearful. So, and like I told people in my group, the fear and greed index is at 0. That's maximum fear. That's, oh my God, I think the world is going to fall apart. The US economy is going to collapse. I'm like, snag up shares now. So you can type in Google, fear and greed index. It's a CNN product. So my Republicans, I'm sorry. I know. Right? But when it's below 10, you want to buy heavy. And when we get to 100, realize that we're going to slide back. Never buy any stocks when fear and greed index is at 100. Because that's when everybody think everything is amazing, is sweet. And it's like, okay, now we got that pullback. Now, in March, we were at, late February, we were at 100. And then we slid all the way back to 0. So you guys can Google fear and greed index. It's the easiest way to know. Once we get to 50, it's going to be game time for the economy.
So right now we're at 36.
36. Yep.
So
it's getting back.
It's getting back to a point.
Gradually.
They're getting more confident.
Yes. And once we get to 50, game over. You're going to see everybody jump in. And you see everybody with options that has puts to thinking about, now they're crying. And I'm like, you cannot bet against the Fed. $2 trillion is a ton of money that they put into the market. So go to Google, CNN, fear and greed index. If it's below 20, buy definitely at below 10. And if it's at 0, buy quality companies.
Yeah, one of the things you've been stressing lately on Instagram for sure is that people need to obey the direction of the market. Can you talk to them about that and how they should look at it to know what direction it's going in?
I'm gonna teach you guys how to invest in 1 second and trade, and 1 minute and trade in 1 minute. If the candles on your chart are green, you should buy. If they are red on your chart, it's going to drop. So if you look at Apple today shot up, Tesla went up. A lot of times people are buying when the market is falling, and that's not the time that you want to buy. Like, all of investing is easy if you stick to your rule set. Most people jump around and be like, I'm gonna get a little bit of cannabis, I'm gonna get a little bit of this. That's not a plan. Like, you're dabbling. So stick to your same plan over and over again and you'll be good. But if you seeing a bunch of red in the market, don't buy. And even when the market was falling, Apple and Microsoft will remain positive on the quarterlies and on the monthlies.
Yeah, one of the indicators that investors like to use is Warren Buffett. So last week he sold over 800,000 shares of Bank of America.
Yeah,
so today is some money, right? Usually that is a telltale sign that something negative is happening in the market. You're saying, don't worry about that. Don't look into that too heavy.
Because you have to realize, like, Buffett isn't going to reveal his entire hand. So it's no different than you're not going to reveal whatever your 2020 and 2021 plans to Vlad if you ran into Vlad. Like, you may say, hey, we're going to ease up on content, and then you guys may go heavy in the TV. Some positions that we're losing, and then now he's capitalizing and getting more. And I told everyone, watch who's talking right now and who's not. There are hardly any rich white men talking at all. They're buying everything up. Commercial property, stocks, getting Class A shares, and then we'll see in the summertime or fall, they'll come back and be like, hey, we knew it. We bought all these shares because it's now a time for action. It's not a time to talk.
All right, we got a bunch of questions on Zoom.
Yeah, we got a bunch. So let me, once again, everybody, welcome to Market Mondays. We are excited, glad to have everybody here. So if you haven't joined the YouTube live with us before, I just want to kind of tell you. So we're going to try to answer some YouTube questions, but we have to answer the Zoom questions first. Those are our first level of priority. Shout out to Zoom. And everybody on Zoom is an EYL University member. That's how they have Zoom access. So if somebody wants to know, like, what's the difference? The Zoom people are EYL University members. If you're interested in becoming an EYL University member, we have a promo code EYL149, $149 for the entire year. That's at EYLUniversity.com. That gets access to our private real estate group. These webinars, private webinars, workshop events.
Yeah, 60% off. It's about $12 a month. It's a steal, y'all.
Yeah. So yes, with that said, JT.
JT, what up? What up, JT?
What's up, brother?
Fellas, what's good? You know, Ian, what's good, man? How you doing?
How you doing?
I'm doing well. You know what? I had a question, right? We got earnings season that's coming up, right? We got the big banks that are gonna have to show some of their profitability again. Some of them will, you just based off of the pandemic. You know, we're gonna have issues with something sliding. If you decided that you wanted to buy a bank, right?
Mhm.
Which one would you recommend? I'm looking at JP Morgan Chase, and I'm also looking at Citi. You know, earnings
JP
not
Morgan.
the best.
I love Jamie Dimon.
He just came back.
Out of all of them, I would do JP Morgan. I wouldn't touch Citi at all. Unless you're already in it, but as a new position, I wouldn't do Citi. JP Morgan, I would definitely do.
Chase is like one of those legacy plays where Chase isn't going anywhere.
Chase and Goldman, those are probably the only two that I would touch. Any of the other banks, I would let go.
I like that. I like that. Now, if the actual earnings, again, it's almost like one of those. What I've seen a lot of people indicate is that now you should be buying the lows, you know, versus like selling the highs.
Mhm.
So you want to get into a position. Is there a range or price point where you say, because I know JP Morgan, they're under $100 right now. I know in their worst, they were probably in the 70s. Is there a price which you're saying like, hey, just buy, or like just buy and then like you can kind of wait it out no matter what?
I like 96. I like 96. The prime time to buy was like when it was like 82 or 83. 96 is decent, especially if you go hold for 5 years. None of these recommendations are flips. So if you can get at that price, you'll be good. But the only two I will hold on to are JP Morgan and Goldman. And I hate banking stocks pretty much, except those two.
The one thing, JT, thank you for your call. The one thing that people should be aware of with JP Morgan as well, and shout out to him, to the mortgage guy, is that you know, they just raised their requirement for 700 minimum for mortgage credit score and 20% down. So when Matt used to actually work for Chase, and he was saying that Jamie Dimon never really liked the mortgage business. And if it was up to him, he wouldn't even be in the mortgage business at all. But that's a way to hedge, because a lot of people feel like the real estate market is going to crash. So that's actually, for investors, that's actually an encouraging thing, because it's like, okay, they're already taking cautionary steps to protect their bottom line and to not lose a bunch of money like what happened in 2008. They're already kind of getting ahead of the curve. So for homeowners, that's not a good thing. A lot of people's mad, but for investors, I saw that as actually something positive, because they're taking a proactive step to kind of get ahead of the curve.
Protect themselves. All right, Clarence, what's going on?
What's going on? Shout out to Troy and Rashad for putting this together. Appreciate it.
Appreciate you, bro.
All right, Ian. So I'm a member of the stock club, and good. This weekend you gave us some prices to get in on, but if we hit the bottom already, realistically, are we going to hit any of these prices, because they seem to be lower than what the market is right now?
Yeah. So the quick answer to that, without giving away the prices for people listening on YouTube, the retirement picks, the first three, you can buy away, because a good like 30% of the people in the club bought today, and two of those went up more than 3 and 4% today. So don't say which ones, please.
No, yeah, that's why I didn't say. But
the top three,
I was holding out for those prices, so I didn't buy anything.
You have an opportunity tomorrow and Wednesday, because the market is going to slide down. And if you're looking for an ideal time to buy, prices normally slide down after 11 a.m. Central. So if you buy midday, you will avoid hitting some of those highs. But just make sure you buy this month, and then in the month, you'll be happy. Because some people in pick number 3 for the retirement were up $2 already. So yeah, just buy the first, then hit me on Telegram, and I'll tell you the prices for the fourth one, because the fourth one went through the roof today.
All right, well, what about the all-star picks?
Same thing. Tell me, they're going to come down, especially that sleeper pick. It's going to slide down because it's close to the high, so we're going to come down, but it's going to come. Trust me. Like, and it's a good gym too. The market crashes every month. It just won't be a crash like this. There hasn't been a month in history in the last 50 years where the market did not come down one day. Like you didn't have S&P hitting 2% gains every single day for a 30 period run. It does not happen. Trust me, I look at it 12 hours a day. We slide down a ton every month.
All right.
Appreciate you, Clarence.
Thank you. I appreciate you.
Let's get one YouTube question in.
Let's get some YouTube.
Let's get one YouTube question in. So somebody said, what about HLF? Herbalife?
Trash.
Crash?
Trash.
Trash.
I'm assuming that's what we stop.
No, it's a multi-level marketing company.
Multi-level
You
marketing.
already tell me the price, but as a new position, and I'll give that caveat, as a new position, no. Mm-mm.
Not rocking with it.
Mm-mm.
Somebody asked about Pfizer. What do you think about that?
Not bad. I like Pfizer. It probably wouldn't be the first one I ran into, but it's not bad. What price? Ask them what price are they looking to get in at?
What price? The person with the Pfizer, the person on YouTube that had the Pfizer question, what price are you looking to get in at? Somebody said, how do you feel about
Yeah,
that?
Michael Hartley. What price you looking at? Michael, while you type that, I'm going to go to a question from Zoom, and we'll get to your question in a sec.
And once again, Zoom is at EYL University members. We have the promo code EYL149, 60% off. Zoom, what's up? Who we going to?
Dwayne, what up, man?
Dwayne, what's going on?
Wayne, how you doing, brother?
Peace, family. Can you hear me all right?
Yeah, we hear you perfect, bro.
Yeah,
All right, word. First and foremost, I appreciate everything y'all do, man. All the content and everything, man, is very, very, very helpful.
thank you. Appreciate you.
Look, I got a two-part question, man. As far as the Greeks, do you have a simple? The first part of the question is, are they always used? Do you always use it to calculate your risk and all?
Greeks, no. I don't always calculate. Like we're getting into a more technical conversation. I would love to have it with you, but if we go into, I think it'll go over some people's heads. But no, when I'm looking at the quality of the company, I'm looking at management, because management determines a lot of the policies that will determine how far a company goes. Then I'm looking at revenue, how much debt they have, and then dominance in their space. The technicals, so I'm going fundamentals first, and then I'll go technicals after that.
Okay, understood. So as far as me trying to get my feet up under me and understand, everything that's going on in the background, I like to get those fundamentals down. Do you have a simplified calculator or some type of reference that will make it easy to get those formulas? Or is that something that I got to do long division with a pencil every time?
No, you want to know if a quality stock is going up or down? Is that what you're looking for?
No, I mean, just as far as understanding the Greeks, basically, not the stock itself, but understanding the Greeks. I just like to have a better understanding of it.
No, like in order to, there's no calculator that I know off of hand, but I'll do anytime I'm going into like percentages of rise and fall, I'm doing it by hand myself. So it's not the easy answer, but you may have to dig in yourself. If I find a resource, I'll send it to Troy Rashad and then they can post it. But any of that technical work, I do myself like by hand.
Okay.
Yeah.
Understood. I appreciate it, folks. Y'all be safe.
Appreciate it.
Ian, what's the Greeks? What is he? What is he?
Talking more towards options, and then I don't want to get into like implied volatility because I think even for traders sometimes they can confuse them. But as far as long-term investing, you guys don't need it. Some people have a preference towards it, but I don't want to dance on the subject here. It's going to go over most people's heads.
Okay.
All right, Ian, we got that price for Fonzie. He said he got it at $36.
I will hold it.
There you go, man.
There you go. There's your answer.
We got another Zoom. Vince, we coming to you. The mic and the floor is yours. You're unmuted. Make sure you unmute yourself.
Okay, you can hear me good?
Yeah, we hear you perfect, bro.
Hey, how are you?
All right. I got a quick question. As a beginner in investing, what do you think is the safest industry right now? I was leaning towards the airlines, but being that I'm assuming they're going to be bailed out, doesn't that mean they're pretty much going to tank even further down?
No, it's not guaranteed. The safest industry, I would say, would be technology first, just on percentage gains. If you do an airline related company, I would do Boeing because I'm only going to tell you to do what I recommend. And then for those who got into Boeing 3 weeks ago, they'll tell you it's worked out well. Everything else I'm holding off on. Delta, American Air. There is a price that I do like Delta, but it's not now at all. So if you want to do Boeing,
I was looking at Delta too. So what was that price that you was thinking about getting it at?
man, I violate my agreement with the stock club owners, but it's too high right now. It's too high.
Appreciate you, brother.
But if you're going to do one, Boeing is pricier, but they're going to have a better gain. Like I have their target at 228 in like 11 months. Trust me, you'll be very happy because if they get taken care of first, they're going to drag the rest of the airlines up.
Thank you very much. I appreciate that insight.
Everyone else listening, think of Boeing as like an index for airplanes. Like if you want the big boy, just attach to them. Because if Boeing goes out of business, everyone else is going to be screwed. Everyone else is going to be screwed. So just do Boeing and you're good.
Somebody had a question about the next wave. Do you think telehealth is the next wave?
It could be. It's too early to see. You have to give me a particular company. I think after the economy stabilizes and everybody goes back to work, nobody's going to care about telehealth as much. There's going to be 1 or 2 players that does well though.
Do you think that this is just a general economic question? Do you think that we're going to open this thing back up in stages? Do you think we're going to open it up in the springtime, fall? Like, what's your just personal? Not that you like are predicting the future, but from what your observations are, what are your personal thoughts on when the economy is going to open up and like how?
It's going to be in stages and probably fully in late summer. Late summer. Yeah, but I'm leaning more towards August. So, and then as business owners, because business owners don't have this conversation in public, but a lot of business owners are happy because now they get to relieve some of that payroll. So this is the dirty part of business that people don't talk about. And every conference that I'm in, they're like, why should I keep a commercial real estate space and pay 25 grand a month when I can have everybody work from home and then lay off some people because the ones that want to work now are going to work harder. So the economy is going to be different, just like it was in 2007 to 2008, because the jobs that were lost in 2008 weren't recovered. No one says that. That's how we got all of this gig economy. Because I remember when I went to school in 2000, it was like, go to school, you finish, you get a job, don't 99% placement. Then 07 hit, and it was like different economy. Same thing again, different economy. So I think we're going to recover in stages, state by state, but it's going to be probably not until late summer until everything's back to the quote unquote normal.
We've seen countries already open up. We saw China open up. Spain recently is opening up in stages. I think they allow factory workers, people who work in construction back in slowly. So that could be a telltale sign of how this might look in our country as well.
Yeah,
that's actually a really good point that you made about the gig economy, and a lot of jobs are never going to come back because a lot of jobs didn't come back the last time.
Yeah, I think it's going to be more so around this time because we have so many people that are filing for unemployment, and like you said, a lot of these CEOs are looking at it like, wait, I could have everybody work hard from home and cut back on the cost of having people come in.
Yes.
I think it's going to be a complete reform as far as the economy goes.
And my fear is that they're going to cut back hours as well, so they can also cut benefits. That's probably my greatest fear.
We're going to Zoom. We got a question. I saw Keisha had a hand up.
Somebody on shout out to Young OG. He's having an issue getting in the Zoom for some reason, but we know him. He said that what's your thoughts on the ticker PAC? We're gonna get to Zoom right next, but he's supposed to be in Zoom.
Let's see. Tough. If he's in it, hold it. I wouldn't. Let me see. It's gonna take a while to recover. But if he holds it for 2 years, he'll hit a home run if he holds it. If you're already in, keep it. Don't start now. If you can get it at 50, even better. But if you're in it, hold it. Give it about 2 years. You'll be happy. It should get back to 110 in about a year and a half.
And young OG, if you're listening, email info@earnyourleisure. Not sure why that didn't take you to Zoom, but email info@Earn Your Leisure. We'll get it worked out for you. Info@Earn Your Leisure.
All right,
Keisha.
Keisha, we coming to you, Mike. We see you. We coming to you right after. Keisha, what's up?
Hi, how are you guys?
Hey, Keisha.
Hi, good night. I'm West Indian, so good night is the greeting. Hi, guys. So I got in last week a few weeks ago when you guys were talking, you said to get in on Boeing at 75. They didn't go all the way down to 75, so I got them at 118, and I ended up getting Starbucks at $55. They're doing really, really well. But a lot of the other things that you guys recommended, you didn't give a price as to when we should get in. So I ended up getting it on Chipotle, and now it's going up, but I feel like I got in kind of high. Should I hold on to that, or should I?
Where did you get in on Chipotle?
Hold on, let me check. It was like 486 or something like that.
You better hold on.
That's a great number to get. I wish.
Wait. I could be wrong. I could be saying the wrong thing. Hold on. I could be saying the wrong thing.
He's 480. I wish.
Wait. I think. Let me make sure. Let me look at my actual stuff.
My phone started blowing up like 480. Yeah, people in Red Panda.
No. No. I got it at 680. Sorry, at 680.
680. Okay.
So yeah, 686. I mean, I made like $57 because it was only one. I could only buy one share. But
right now,
it's at 744. Yeah, hold on.
Hold on to it.
No, hold on. He's gonna look at it for you.
No. Hold on to it.
Hold on to it.
Yeah.
Okay.
Yeah, and this is a good lesson too. You shouldn't worry about a stock over the course of a week if you plan to hold it for a 5-year period anyway. If you got into some good, Starbucks is one of the picks for the stock club. Boeing is as well. Chipotle is high, but I have some members in on that as well. So you got it a little bit high, but hold on to it.
I got Boeing at 118 because it didn't go down to the 75. Yep. So I got a couple of shares of Boeing at 118.
You're good. It's like 147. You're good. You're doing better than most of us on Wall Street right now.
Okay. Delta, I got it. But I got it higher, and then I ended up selling it because I think I got like $36, and then it dropped all the way to like $19. So I ended up just selling it because I was nervous, and now it's going back up into the 20s, I guess.
Do this for me. Whatever you quit. Mute out real quick.
I'm a mutual fund.
Yeah, remember this. Don't gamble. No one wants to hear this. I didn't want to hear it either 10, 12 years ago. Whatever stock you have, please hold for at least 5 years. You should be holding all of them for 30. Like, trust me. Delta, if you can get in below 16 and you hold it for 5 years, you'll be happy. But yeah, 36 is too high. But I commend you for cutting your losses and then not dragging your portfolio down. But you got in the Chipotle, you got in the Starbucks, you're golden. You're good. Please hold Starbucks and Boeing. Please, I'm begging you, please.
Appreciate you.
Okay.
Kid. All right, we got another Zoom. No MD. You are on the mic and we are unmuting you right now. Floor is yours. You there?
Probably not.
Damn. All right, bro.
And for all of you that close your portfolios off, and please, like when crashes happen, don't sell off at the bottom. Please.
And, shout out to MG, the mortgage guy. I'm gonna ask a question for him. But yes, Ian, for people that are interested in like specific stock numbers and all that, Ian has a stock club. And he has a variety of different educational platforms that he has. All of the information is in the bio of this video, actually. We have the link for Red Panda. So if you're interested in information on Stock Club or any other educational platforms, you can click the link in the description of this video, and it'll bring you up to there. But yeah, so MG the Mortgage Guy, our guy, he had a question. He said, ask Ian about Spirit Astro Systems. That's Spirit, right? Regular Spirit?
Is that Spirit Airlines? Same thing?
Spirit Astro Systems. Is that Spirit Airlines or no?
No, tell him to give me the ticker.
All right.
Spirit Aero System, SPR.
Hello.
I love Matt. Tell him I don't like it. The last high was at 105 in 2018. So when a company hits a high 2 years prior, it's like having a player that hasn't hit his season high in 2 years. I don't like it. Like I want a player to be consistent and rising throughout the years and not his best days being behind him. SPR is kind of like Melo. I love it, but the best days behind.
James.
If you got it at the 20s, if you got it at 20 or below, you're good. But anything higher than that, no.
Hey, can you guys hear me?
James, what's going on, bro? The floor is yours.
Hey, what's going on, guys? Hey, first and foremost, thank you, Rashad and Troy, for just hosting these Zoom lives, man. I really appreciate it. And also the Facebook content, really appreciate it. Hey, so Ian, quick question. So can you just touch on the cruise line stock, in particular Royal Caribbean? So I know you touched on it earlier today, but if we have the capital to buy and hold and, kind of wait out the storms, do you think that's a good position to get in on?
Are you willing to hold it for 3 years?
I can.
No, see, I heard your voice. The voice changed.
There's a crackle there.
Yeah, I can't listen. The thing is, we always have a plan, and then it goes against us, and we're like, "Damn, I need to get rid of it." So if you can hold it for 3 years, yes. But if it's going to make some sense for it to drop 25%, which you can, don't do it.
Gotcha.
But if you hold it for 3 and get it at 30, you'll be all right. And it's going to take you a while for it to go back up because it's going to take. Because when hotels, cruise lines, and vacation travel comes back, they're going to do a whole bunch of deals for cheap. They're going to be loss leaders. Revenue won't be positive. I got a deal the other day sent to me. I think it was like Cancun for 8 days for $500. I'm like, y'all are hurting.
Right. Yeah.
Telltale sign.
I'm like, what? You're giving this stuff away.
Right.
So, negative revenue is going to be negative, which won't be good for you. But if you can hold it 3 years, you'll be good. But from your voice, sound like you don't want to.
I got you.
So,
I got you. All right, I appreciate it, Ian.
I appreciate you, man. Thank you so much.
Daniel, I see you over there waiting, man. Daniel Allen, what's up, bro? The floor is yours. You're unmuted. What's going on?
What's going on, guys?
Everything good, bro?
Daniel, how are you?
I'm good. All right. Question. So, as always, I got a few questions.
That's
So,
good.
recently, my wife was telling me about Cash App. With the stimulus package, they're giving people, basically, they're letting you direct deposit. They have a router number and account number. So, I wanted to know what you thought about Square, because they own Cash App.
Yep, I like Square. They've had some issues recently, though. As a long-term investment, if you can get it at 50, maybe you can ride it to 90. Its last high was in 2017, though. That's not good. That's not good. So yeah, this will have to be a short-term play. If you're not willing to hold for 5 years, don't do it. If you can get it at 50, it'd be a decent price. But yeah, this last high was in 2017. No, I don't do it. There's other tech companies you can get into that are growing.
Okay, so my next question is, what do you think about PayPal?
I like PayPal.
Yeah, that's one of the things you always talk about, PayPal, Ian.
Yep. I like PayPal a lot. Their most recent high was in March. Yeah, you got to get at 100. 95 will be better. But yeah, PayPal is good because PayPal is interesting because it's tech and what I call debt collection, like Visa. Those are good. I like PayPal and Visa and American Express. But don't unless you're gonna hold it for 5 years.
So, and I hear a lot of talk about like cashless systems. Like, is there any system that you're interested in right now?
People have been saying that for a while until one becomes prevalent. Like, I don't want to gamble. Like, I don't want to draft off potential. I want to go to the court and see who's ever getting 40 every night and draft him. That's what I want. Like, I'm the guy on 2K. I'm a cheat. I'm gonna go get whoever the best. You're not gonna put me on Orlando Magic and be like, hey, no, I'm getting Bron and AD. That's how you should invest. So no, not yet.
All right, one more question before you mute me. I hear you say, because you're saying that like hold it, like okay, like if you're already in at a certain number, hold it. But should we not be buying more stock or just keep it at that amount we already bought?
No, keep buying. So if it's a good company, you want to buy it every single month. I always tell people it has to be the first bill you pay every single month. If it's quality, if you're buying trash, like you buy trash. If you're not going to Walmart to buy knockoff J's, I don't want you to go to the market about like knockoff stocks that are not rising. So if you're not getting 11s out of Walmart.
Ian's analogies are always on point. Daniel,
Exactly.
we appreciate you, man.
Appreciate you, bro.
Thanks, guys.
You know, I wanted to ask you a question before we go to any other questions. I want to ask a question. So for people that might be tuned in, there's a lot of people tuned in right now. Shout out to everybody on YouTube. Shout out to everybody on Zoom. For people that might or even hear this after it's done, they're getting a stimulus check, and this might be the first time that they ever think about investing, right? They're getting $1,200. Maybe they want to start investing with $1,000.
Yeah.
What are your suggestions to those people that first time investors that are getting a check and want to do something productive with it?
Yeah, where do they even go to invest?
Man, start small. You can go to Robinhood or M1 Finance if you are a beginner. You can also do Cash App. They have a platform that you can do some stuff on. And I would say start small. I would buy one share of a company. One. Because you need to get confidence in it first. Because I don't want you to put 600 in and you lose and be like, man, Troy, Rashad, and Ian, y'all on some BS. No. I want you to start small because you need to see it work. What made hooping fun? When we were 2 and 3 years old, we didn't go to the court. We started on little tykes or the garbage can. Get your little layup in, cool. Get your fractional share. When you see it go $4 or $5 and you're like, oh, this really does work. Then you'll start to put more money in. So just buy one share, get started there, and you'll be okay. Now, if you're hurting and if you're behind on your bills, man, try and put 20% away and then get caught up on your bills and take care of your household first. But if you're good, you got food, bills are caught up, put some money into the market, and then in a month, see how it's doing.
And like, I love what you said too, like trust the journey, because it's like, you're not going to get rich off of $1,000, obviously, right? At one time. But the key is to practice, to learn, to get comfortable, and you're going to make some mistakes, but you got to get your foot in the game. And it's like, this is a long-term game that it's not a get rich quick scheme where you're going to turn $1,000 into $1 million in 30 days.
Nope.
But the hardest step is to take the first step.
Jump off the porch,
so take the first step, get your feet wet, and then just take it from there. Keep educating yourself.
All right.
You got a question?
Yeah. No MD. No MED. What's up?
Hello.
The mic is working now?
Is it? Can you guys hear me?
You sound great. You sound
awesome. So thank you guys once again. This is a blessing to be able to learn about this and expose the community and the culture. We appreciate you. So I have a couple of questions. So I invested in Robinhood and Stash and TD Ameritrade. Okay. So I'm kind of taking each one differently, a different approach for each one. So I'm using Robinhood to invest for long term. So I bought basically a stock for each company that I was interested in. So I'm gonna run through the list. And for some I brought 10, but it depends the price. So here we go: Nike, Apple, Beyond Meat, Microsoft, Johnson & Johnson, Discover, Bank of America, JP Morgan, Facebook, Home Depot, Starbucks, and Ford.
I hate Ford.
Okay.
The rest of them and Beyond I don't like.
Okay.
But the rest of them are. How long you been investing?
I just started with you guys. You
are an all-star.
Yay! that's all credit. That's all credit right here.
You did very good. Bank of America, maybe I would take out and add some more JP Morgan, but like if you got it at a good price, good. The rest of them are good. Nike, Starbucks.
Yeah.
You said Apple?
Yeah, definitely.
You're good. You're good.
Yeah, and then I got Stash. So I'm using Stash to kind of just add a monthly recurring payment to each one that I purchased. And I have Tesla, Chipotle, and Microsoft here as well, McDonald's, Best Buy, Costco, Zoom.
You got everything.
You got all that from us?
You got everything.
Yeah.
You are the #1 earner. Shout out to you.
I would get rid of Best Buy, but for you to be a beginner, You have 5 or 10 years worth of experience already. Like you don't need.
I'm humbled. I'm humbled. I'm a
Yeah,
teacher,
you
so I'm
need to-
trying to make sure that whatever I'm learning, I'm gonna be
Yeah.
able to reciprocate it. So I got to
Shout out
learn
to
it
my
as quickly as
teachers.
possible.
You're doing good. Cut Best Buy and beyond. Rest of it, you're good. And you
Awesome.
spread the word.
Oh,
You're
and I definitely got Boeing. I forgot to mention it. Yeah. All right. All right. Thank you once again.
Where you from? LA, West Coast?
New York.
Yeah,
Okay.
shout out to the teachers.
Shout out.
You're killing it. You're killing it.
All right. Thank you guys. Be
Thank
blessed.
you.
A beginner?
That's crazy.
Yeah, like you hitting some home runs out the gate.
I
Please.
was about to say she drafted the Eastern All-Stars just now.
For real, like she's killing. And I want to bring this point up too. The number of shares you have is the most important. And in our community, we start too late. We'll start hooping at 3 and 4, but won't get any shares until 29. You have to start early.
Yo, that's a fact.
If you get and it's tough, so you have to start on your journey, but you're not even really at the table till you get 10,000 shares. You got to think of every share as like a unit of time or the number of employees to help you get to freedom. The average Black family only has less than 12 shares. You don't have to believe me. Go text your cousin and call your cousins and ask them outside of your 401k how many shares you have.
I'm surprised it's that much, honestly.
Yeah, we have to catch up. So buy them every single month. And so you guys asked a lot about platforms. All of them are good. Some are better than others, but like it's not the 1980s. Like the brokerage platforms are pretty much evened out. If you buy every single month, like 5 or 10 years, that'll go by quick and you'll be good.
Yeah. How do you feel about ETFs?
If they're not highly levered, they're good. You have to be careful and you have to watch. Like if they're 3 times or 4 times levered, you can't stand them long. Because they, like when SVXY blew up, was it 2-3 years ago? It was at an all-time high, and then all the funds got out of it in 1 week, and it collapsed. It dropped 85% value. So you have to be careful. But all asset classes could technically do that, but I just try and stick with the ones that I know, like VOO, VTI. Is rinse and repeat. Like if you have LeBron, AD, and you add Kawhi, are you really gonna look at Porzingis? It's like, for what?
We seen that China has opened up their economy. Some people are asking about Chinese stocks. Baidu came up. You still only Alibaba is the only one you trust?
Yeah, that's what I like.
If you remember, like a few weeks ago, I never trusted Lukin. I don't trust him.
I called you.
I look at it like this because there's too many good domestic companies
like Starbucks
to play in overseas where you don't know the economy is different, the political factors are different. I was never a big proponent in international investments because I feel like there's too much value in America. That's just my own personal opinion.
Yeah.
What's your thoughts on that?
I know people want international exposure, but all of the biggest companies here have international exposure.
Exactly. Exactly.
Apple, Microsoft, Google.
Exactly.
This isn't the 1920s. Like there is no separate economy. So like when we fell, the Nikkei fell. Like all the markets slid down at one time because they're all tied. Like it's like a economic gumbo. We're all tied in. So if one falls, all are going to fall together because everything is so weighted together now. There isn't as much separation as there once was, probably like in the 40s or 50s or before that.
Look, Charles from YouTube, I asked a question for you. The only one he's trusting in China is Alibaba. Dawn, we coming to you. I know you've been waiting. And Linda, I see you too. We coming to you right after we get Dawn. Dawn, the floor is yours. We unmuting your mic. Make sure you're unmuted.
You guys hear me?
We hear you perfectly.
Thank you. I appreciate y'all. Y'all helping me get my entire financial life together. So
Okay.
my question is,
Dawn, do me a favor. Just turn your volume down just a little bit.
okay, sure. Hold on a second. Oh yeah. Is that better?
No, you good? You good?
Okay. My question, Ian, is my employer just opened up the employer stock option program, and can you check the ticker for CE and tell me when would be a good time to get in on it, or if you think it's a good buy? As they're offering a 15.
Court.
It's CE.
Yeah.
What are they offering? You said a 15 what?
They're giving you 15% off.
So give me 15% off, Ian. Keep that in mind.
If you can get in at 75, it'd be good. 75 flat would be good.
And then when would be a good out?
129 if you don't hold it for 5 years.
Oh, I'll probably hold for 5. Okay, thank you.
Yeah, you're good.
Thank you.
Thank you, Don.
And once again, the Zoom, everybody that's on Zoom is an EYL University member. We just started our real estate group. So yeah, 60% off of that for EYL. The code is EYL149.
EYL149,
and
that's right.
People have to ask specific stock questions. Ian has 3 levels of his stock program that he has. We actually just ran a promo with him last week. I see that sale is over. The prices have gone.
Yo, YouTube's going crazy right now. They're like, can y'all bring that back?
Listen, okay, this is what I'll do. I'll bring the price down. This is the only thing that I want. And I'm going to tell all my people this. I'm only speaking to people that are black, right? Because I'm black. We have to take action. So I know some of you thought the stock market club was like just a call. I want you to buy. I want you to buy. You can go look at every interview that I've done. I've talked about the same stocks forever. If I'm Rob Pelinka, I'm not giving up Ron. So in every interview, I'm gonna be all in the video, dancing, talking about Microsoft and Apple first.
Wait. You and Leroy, right?
Yeah, like, man, it's like you want to rinse and repeat and keep quality. So I'll one day bring the price down, but I need you guys to realize it's a stock club for you guys to take action on, not for us to sit and talk and you like want to know, because my stance on marijuana isn't going to change. If we get national legislation, I will be the first person to be like, let's stop all the weed we can. We're not there yet.
So what you're saying that if in the future, hypothetically, if we ever do something like we did before, it's not a gimmick, take action, because once it's over, like it's really over. People DMing us like, I'm like, it was a 7-day run, like it's not
promoted like crazy.
If you're interested, I mean, you should probably just take advantage. Like,
and we extended it 3 more days. It was like a 10-day run. We extended it 3 more days, and people were like, "Oh, wait, I should look." And then you did a free one on a Saturday, just so they could see what was up. Some people took advantage of it.
Analysis paralysis.
There it is.
You have to take action. You got to take action.
Linda, you've been waiting so patiently.
Linda, what's going on?
Linda, let me help you. I appreciate you.
Hello.
What's up, Linda?
Hi. First of all, I want to say, guys, thank you so much for what you do. I tell everybody about you guys every single day. Definitely.
Appreciate that love.
So I have a couple questions. I'm going to make this quick. One, I have a 401k, and I know you stated that you suggested some retirement accounts. Do you think that now I should open up a Roth? Because the 401ks that I have like maybe 4 index and just 1 common stock.
What common stock is in there?
Target.
Okay, not bad. What indexes do you know off the top of your head?
U.S. large company stock index,
okay.
International developed market stock index, U.S. small company stock index, and international emerging stock index.
Okay, and you're getting what? Last year you got what? 13% return?
I don't know.
That's your homework for tonight.
Okay.
What your return was for the year last year, because last year was a good year. You can open a Roth, and start there. Are they matching you on your 401k?
Yes.
Take full advantage of that. And then
I'm investing over it, but they're definitely matching, yeah.
That's good. Okay, that's good. And then do a Roth and continue to add to it.
And then I have little kids, and I'm trying to show them how to invest as well. I have Disney for them, and I just wanted to know, is there any other stocks like geared more towards kids that you can suggest?
Before you answer that question, we got to make a special announcement. So for the first time ever for YouTube Live for us, we have hit a record. We have broke over 700 people currently watching. So it's probably like 12,000 people that's watched this in a 24-hour time span. So thank you. Shout out to YouTube, EYL University. This video will probably be like 15,000 views in the first few days.
Market Mondays, y'all.
Market Mondays. It's lit.
It's every Monday, y'all. We ain't playing.
It's lit. All right. So yeah, I just had to break that news. We appreciate it. What were you saying, Ian?
Yeah, you guys can write this one down. Take Two Interactive. The ticker is TTWO. So what I want you guys to do is Google Take Two Interactive and type in the comments what kind of games they make. Linda, one thing you can do with your kids, so when you buy, let's say you buy on every Monday or every Friday, go over the market with them once a week, and they'll pick it up like crazy. How old are your kids?
2, 7, and 9.
Especially with the 7 to 9-year-olds, go over it with them every single week. And it only has to be 5 minutes. Look at Disney, Take Two Interactive, and let's say Apple, because Apple has a big game store. Look at those three. I promise you in a year, they will be telling you where you should buy. Like I did a video yesterday of my son, when the market opened up on Sunday, my son told me where the market was going to drop to. He's 5. Kids have a different level of fearlessness that we don't have as adults because we got to pay bills. And then on top of that, they don't fear certain things because they don't have to pay anything. So they can see things in a much clearer fashion that we can't, because we're worried about what if this goes wrong? Can we not meet our bills? Kids are like, mommy's going to take care of it. It doesn't matter. So start to show them every single week. You'll be surprised at how, and it's a good bonding exercise too, especially for our community. We have to do that more.
Okay, and just one last thing. How you showed us how to check like where to get in. Am I supposed to do that for each stock that I'm looking at?
Yes.
Okay. Thank you so much, guys. I appreciate you.
I appreciate you.
Thank you. Shout out to Keon, our boy.
Yeah, 914.
On the super chat.
GB, what up?
We appreciate it. So, how you feeling? We had an hour mark right now. Ian, how you feeling? You want a couple more questions? Or?
Yeah, we can do it as long as you guys want to. I appreciate you guys dearly. Thank you for putting me on and showing love. Like I'm gonna say that every interview, they're like, I'm like, no, I'm shouting out them, my dad, my mama, my brother.
No, I can't wait till we can get down to Houston, man. We gotta have a good time out there.
A million dreams. Thank you for the super chat. I hope I said that correctly.
Yeah, I think it sounded right. Somebody asked in YouTube, shout out to everybody on YouTube. We see your questions come in, it's just happening so fast. What is a good price to buy Amazon at? I know you said we should be in, it's pretty high right now. Where should they get in at?
1740 is where I recommend it. It's too high now, you have to wait till it come back down. And here's the thing, stocks always come back down. You're gonna have to, so when you get up, after you say your prayers and meditation, brush your teeth, pull up the stocks app on your iPhone and see if they're there. And then buy. You can do fractional, but I want you to get into the habit of looking because these companies do control our lives. We don't have to get into like conspiracy, Illuminati theories. Like these big companies run our lives. God forbid if the cell phone towers go out, Zoom, Microsoft, Apple go down, man, we will be in prehistoric times. Like these tech companies run our lives, so please take advantage of them. But 1700, 1800 is where you have to wait to get in. I originally recommended Amazon 800, and people said it was too high. Now it's damn near 2100 again.
Wow. Amazon, one of those stocks where it's like in 5 years could be $10,000.
Yep. Yep. Y'all talking, having them Gucci shoes and fellas with the Louboutin kicks, and you like Amazon too high, bro. You gotta pick. You gotta pick. I'm sorry. Quality.
And I think that's one of the good things about this whole situation is that it really puts things in perspective, what's important and what's not. And it's like now it's like clothes don't mean anything anymore.
Don't matter. Yeah.
Don't mean anything. It's like now everybody's interested in stocks and real estate and things of that nature. So it's encouraging. But you know, hopefully people remember this when we get back to actually going outside and don't get
this is the time where it's like keep this same energy. Don't
start spending money and running up credit again once you get the opportunity to.
Yeah. Giovanni, appreciate the super chat on YouTube. We appreciate that.
Giovanni, thank you. Shout out to all of our Latinos that are supporters. We have a huge support in the Latino community. Dominican Republic, Puerto Rico, Colombia.
Now we can't go to Dayton, man.
Yeah, it's unfortunate. That's unfortunate.
Man. Gills, we unmuted you. You gotta unmute yourself, bro.
Thank you. I'm here. Can you hear me?
Yeah, we hear you, bro.
Jose, thank you for the super chat. Appreciate it. Yeah, what's up?
I want to thank you, brothers, for the knowledge you're sharing with us. That's one. And I was wondering, Ian, how you feel about pharmaceuticals? I'm looking at Teva right now, TEVA.
It's on my watch list. Let me see. TV. Tough, man. How long are you looking to hold it?
I'm long term, 5 years or plus.
Are you in it now?
Right now, I have 10 shares. I bought I think at 10.08, something like that.
So yeah, hold it. Like the first level needs to break through a 17. It's going to be a tough ride. But if you hold it for a few years, you have a chance for it to go to 27. They've been on a sharp decline since 2015, though. So I don't love it. But if they get some news, if they get involved in COVID in any way, they're going to go through the roof. But as of right now, I don't love it. I don't love it.
Okay.
It has potential, but I don't love it.
Shout out.
I appreciate
Appreciate you, Dales. Thank you, bro. Shout out to Shaq on the super chat. Check in. Appreciate you. Yeah, this is like the Jim Cramer for the streets.
Yeah.
Like
That's a fact.
Cramer.
That's a fact. Yo, Ian, we got a question, and this is crazy because we actually did this project over the summer. Gaming stocks. Right now, we know a lot of kids are home, so I know a lot of gaming is happening. What do you think about gaming stocks? I know the thing we covered over the summer was GameStop and how the brick and mortar business is not looking great. But what do you think about game stocks like Activision and things like that?
I love Activision. I love Take-Two Interactive. Those are like the main two that I would flock towards. GameStop, of course. I mean, GameStop was on a death spiral before this happened. This just helped.
Right.
Like they were like the blockbuster of the gaming industry. And if you
it's funny you said that was the exact lesson. We use those comparables because GameStop, a lot of their profits come from reselling of games. But once Microsoft and Sony decided to do downloadable games,
it's game over.
Business.
Yeah, it was over with. So it's like you have no leverage anymore. People don't want to leave the house, especially kids from 21 down. They don't want to leave the crib. They want to just stay in the house, play for hours on end, which is great for technology again. It's not that I'm the smartest person. I'm just traveling to where the most money is. All the money's in tech. All the VCs put 80% of their capital into tech. Very few VCs are putting their money into brick and mortar. But yeah, Take-Two Interactive and Activision, I like a lot.
So we got, let's do like two more questions.
Let's do two more.
This is going to be a weekly show. We want to
kind of,
Zoom
is ringing.
We can't give away everything.
Zoom is ringing.
You got
if you guys want to do a special on a stock club, maybe we'll talk about it, but hop on it. A lot of y'all hit me like, man, do it one more time. I'm like, it's a special for a reason.
Star, what's going on, Star? The floor is yours.
Chef TTV, thank you so much. $20 super chat. Appreciate that. Oh, super chat is ringing in. Indoor 23136. Thank you for the super chat.
Star, you got the mic. It's you. Go ahead.
Hey, so with everyone being at home due to the coronavirus, just want to know, how do you feel about investing in like fitness, like Planet Fitness? Because I know they're incorporating technology right now and letting people use apps to download to work out online.
I think the ticker is, what's the ticker real quick?
Star, you know the ticker?
Checking it.
Okay. Star, where you from?
Alabama.
Okay. Alabama. I heard the southern accent. I said,
oh yeah. Look, I'm gonna be honest. I'm just trying to help my boo out. I'm gonna let her talk because she's the expert on it.
It was great at 32. If you can get it at 44, maybe, I wouldn't mind it. Because they were doing good beforehand, so 44. What part of Alabama are you from?
We from Auburn, Alabama.
Oh, okay. Okay. My mom lives in Midway, so I gotta, when this is over.
Oh yeah.
Yeah, I gotta swing through Alabama.
Oh yeah.
Hey, I just want to say thank y'all for everything. Y'all changed my life so much. So thank you, Troy, Rashad. Thank you for everything.
Oh, appreciate it. Can we stay on the fitness tip? What do you think about Peloton?
Give me the ticker. PL.
Yeah.
I like the bike. Let me see. Hold on. I'm not biased. Hold on. Let me find it. No, it's not PL. Hold on. Peloton. Is it PTON? If it's PTON, not yet. No, not yet. It's too low. It's not yet.
All right.
Got potential. Ton of potential. Not yet though.
So once again, shout out to Enor 23136 on the super chat. He had a question. He said, well, I don't know if it's male or female, but how important are 10Q and 10K reports when choosing a stock as a new investor. Can I use Fibonacci to choose exit price?
You can choose Fibonacci to get exit price. Most important is direction though. So look at what the color of the candles are or the line graph is first. So if it's trending up in green, you're good. You can use 100% as an exit point. If you want to get really fancy, you can put on Fibonacci extensions and use the 123.6 or the 150 of the 5-year. That'll tell you a potential exit price. 10K reports as a new investor, you don't need. Now, if you are super technical and want to get on your nerd stuff, yes. But as a new investor, no. Because you can end up reading so much information, you can talk yourself out of a good stock. And once again, you're not going to learn anything until you actually put $1 into the market. Like prime example, Delta, everyone's like, oh, he don't know, and it slid right back down. I'm like, I know that from buying airlines. Airlines are one of the worst. Anything with an engine in it, I don't want to put my money into it. Whether it's personally buying a new car, brand new, airline company, RV, I don't want to put my money into anything that has an engine. It goes down in value. Automatically. I'm itching for a Bentley. Not going to do it. Like somebody's going to sell one for $3,000 a month in no time, and then they going to sell it for nothing. The same thing happened in a recession. Like one of my friends got a new S550 for $15,000 in the lab because the dude had to get it off his hands. He bought it brand new.
Damn. I need that though.
It's like anything with an engine goes down in value. No.
Lily.
So you're more of a technical investor than a fundamental investor. Is that true? Or
I look both. So I'll look at the technicals first, and then I'll look and see what the revenue is. It's the same model that I like for my personal life. So if they have little debt, great management, I'm happy. Because it's the same thing hooping. Like players win games and management wins championships. Like John Wall can score 50 every night. They're not getting to the finals because he don't have the pieces around him to push them to the next level. You put John Wall on the Clippers or the Lakers, they will kill because the management is in place to help them facilitate and get to where they need to go. So I do a combination of both.
So shout out to Vincent McDonald on the super chat. He said, EYL University has taught me more than my college degree.
Hey.
Wow.
Very humbling.
Wow.
Very humbling.
Thank you.
Very humbling. We have another question.
We had one. Lily, I was coming to you, but I think she kind of ran away. Maybe she had some difficulties with the microphone.
The Zoom is lit right now.
Yeah, it's crazy
Zoom
right now.
is on fire. This is gonna be big.
I'm trying to figure out if people are raising their hands or they put their hands.
One more thing.
This is gonna be big, man. This is gonna be big.
I'm
the future looks promising.
Yeah, I'm honored, seriously. And for business owners, and I want you guys to dive into this, but as business owners, double down on your marketing, double down on your content, double down on reliability, and you'll be able to weather the storm. Business owners, put your money into the market as well. Because Lord forbid if something happens and your customers choose to stop buying from you, at least you can lean on Bezos or Tim Cook or something. And I'm not telling you to do anything that Universal Music Group isn't doing or any of the big movie houses are doing, but double down. And I want you guys to dive into that part because people forget business is one of our primary investments. So you need a machine. You need a business, long-term investing, short-term investing, real estate, commercial. It's not one or the other. You need all of it. But for the entrepreneurs, can you talk to them and dive in about, because I've been posting like crazy, and I still feel like I'm not doing enough and posting like 3 times a day. Can you dive in deep for the business owners about what they need to do to be able to weather the storm?
Yeah, for sure. You're talking to us, right?
Yep.
Yeah, I think that for business owners, more than anybody, I always say more than anybody, business owners need to take financial literacy serious because it's like at a job, you have certain cushions that's available to you, whether you know it or not. Like a 401k plan is set up for you. If they match, that's free money that they're giving to you. If you're fortunate enough to have a union job and you have a pension plan, you got a pension plan, you got health insurance, you got a lot of stuff. Even when you lose your job, it's like you have some kind of COBRA that you can kind of rely on. It's like, as a business owner, you have none of that stuff. And what happens a lot of times with business owners is that they never bother to set up a retirement plan. They never bother to start investing. And they're really living paycheck to paycheck because they're not getting paid, but they're paying themselves. Like whenever they need money, just take money out the business. Yeah. Their books are a mess. And what happens is that they always think that it's going to be like, okay, it's going to be coming in. Barbershop's a perfect example of that, right? nobody ever thought that barbershops would be shut down. So now if you're a barber and you never took time to save money, what are you gonna do? You're screwed, because now you can't cut people's hair. The shop is closed. So not only do you not have any money coming in, if you're an owner, you got to pay rent, right? So now you're behind on your rent. Now you got all your other expenses. Your kids got to eat, stuff of that nature. So for employees, it's extremely important. But for entrepreneurs, it's probably even more important because they have less safety. It's harder to get unemployment for an entrepreneur. Like we, try to get these small business loans, but that's tough. Yeah. They said nobody's really even getting the money yet.
Yeah, because they're starting with the top.
Yeah, so as an entrepreneur, the safety net there's no safety net. So yeah, everything that you're speaking about is extremely relevant. Budgeting, savings, retirement. And a lot of times people only look at that from an employee standpoint, but entrepreneurs have to look at it even more so, take it even more serious.
Yeah. I mean, he's speaking firsthand, man. Like what he just explained was our scenario, right? He has been an entrepreneur for the past 11 to 12 years. I've been in a union job, man. So like having both sides of the spectrum is very important, but diversifying and making sure that you're using this time wisely, making sure that it's an idea time, not ideal time, right? Investing in yourself, educating yourself, coming on at EYL University, learning about stocks, learning how to diversify your portfolio. All these things during this time will be invaluable because like we said, when we come out of this, the meter of value will be hopefully in your favor, but if it's not, then you're going to be expendable.
And also another thing too with business owners and entrepreneurs is that multiple streams of income. So I'm speaking, this is in theory. I'm a business owner, I'm an entrepreneur. And everybody that follows the podcast, I'm a financial advisor. So once again, it's like my financial advising business is still up and running, fortunately. But it's a little slower than it would be normally, obviously, because I don't have office. I can't go to my office, right? Everything is virtual and everybody's kind of in panic mode right now. I say that to say, now I have a cushion with Earn Your Leisure from the multiple streams of income that we have. So just as an entrepreneur, don't put all your eggs in one basket, even as an entrepreneur. Like even as an entrepreneur, you shouldn't put all your eggs in one basket. It's important to diversify and have multiple streams of income, because if I had to rely on just one stream of income right now, then I'd be in the midst of a financial crisis.
It'd be a crisis for sure. Yeah.
And I know you guys often hear the number as 7. The actual number that you need is around 27. Ideally, big business owners, go talk to any commercial real estate developers. They want to have 1,000 doors. That's 1,000 streams in this. Like a lot of conversations that you guys don't get to hear in business meetings, people aren't going to tell you because it seems too unrealistic to achieve. Like even tell the story about, what's my brother's name? The brother that had the weave shop, they made 500,000, but they netted.
Chris Senegal.
It's like you can hit a lick and make 500 grand, and then at the end of the year, you taking home 30 a piece, and people like, how? I'm like, expenses. So that's when everyone killed me on the episode about debt. I'm like, you guys never had a loan called in for 40, 50 grand. Like debt is not a good feeling at all. So, and my artists, to all my recording artists, my God, be careful, because when this is over, you're going to get put in some of the worst deals the music industry has ever seen, because they know that you're hurting. Please don't sign them. Please diversify. All the stuff that Budden has been screaming about for 2 and 3 years, about getting your bag, saving, please follow. Like the recording artists are going to get hurt the worst because they have no money coming in because they can't travel and do shows.
And they don't own their masters or their publishing. So even though people are home streaming music, the record company's making money and the artists aren't making anything.
Getting killed.
It's crazy. Because most of them are live on live performance.
And I love that hopping on IG Live, but it's like, y'all couldn't have got together with Smack and did that and made some money?
Yeah, exactly.
Yeah, y'all making anything. Like I saw Tori got put in IG jail. Tori get 200, 300 people. I'm like, what? But that's the music business model. So
you're free now. Shout out to
and that's what Dana Chanel said when she came on our podcast. Is like you got to create your own platform. And we talked about that on the podcast. Like Tory Lane's a perfect example. To have that many people, he's obviously an entertaining guy. He has charisma. He has the swag. This is a perfect opportunity to branch out and create your own situation. And
Tory's a star. Like I don't like Tory a whole lot. I like his music, but Tory's a star. Like
they got stock quality for sure.
It's certified stock.
You need to build a platform and turn this into something. And I know people clown on OnlyFans, but some of these artists need to get on OnlyFans and start to do some kind of exclusive material for their fan base to bring in some revenue. But unfortunately, them 360s.
OnlyFans has saved lives. a lot of
shout out to all our friends.
A lot of lives have been saved by OnlyFans.
Yeah, a lot. So, but business owners, own a platform, email more, market more, post more content. Even with me, like, man, I was having a conversation, and to see you guys do it, like how you have it set up, like, man, Gary Vee was telling me this in 2016. He like, you need to put out 500-600 pieces of content a day. I was like, but you see everyone who's killing in this era, like, I can't imagine to see what Market Mondays is going to be like in a year after we clear and then Bowen's at 300 and people can go back and look in the archives and kind of see, but you guys have led the way and given inspiration to those who look like us, put out more. So thank you.
I appreciate that. Can we do one more question from Zoom? We got a Zoom question? We're going to do this.
No airline questions and no cannabis questions, please.
Please, no cannabis questions and no what other kind of questions?
Airline.
No airline. Yeah, we talk about airlines a lot. Everybody wants to get airlines.
Look, Zoom, I'm gonna lower your hand, Zoom, and then if you have a question, just re-raise it. All right, I'm gonna lower hands because everybody's hand is still up. I'm not sure if that's because y'all was on before. I'm gonna lower all hands.
You're gonna lower your hands, and if you got somebody, just raise their hand again.
Yo, Daniel, that's like number 10, bro.
Daniel,
Hold on a
Daniel,
sec.
be on it. Daniel, be on it.
I ain't even lower your hand yet, bro. Hold on.
Shout out to all the EYO University members. Shout out to everybody on YouTube.
Daniel, go ahead, man.
What's going on, fellas? Back again.
My guy, come on.
What's up, dude?
Yo, so I know the last quarter we talked about 5G stocks. So what does he think about the companies that are making or putting up the cell phone towers like Crown Castle?
Good.
That's a controversial question. 5G is very, very controversial these days.
Yeah.
Very controversial.
Thanks, Daniel.
Crown Castle I like is high. It is high. And there's another one that I like too. They're both high. Wait for them to come down. As a third play, Verizon already has like a lot of 5G towers set up already. So that can be like a little sleeper. But CCI and the other company you guys have been asking me about that starts with an A, I like both of them, but they're both high.
Appreciate that. Thank you, bro.
Yeah.
So, all right. So here's the rundown. This is the first of many Market Mondays. Every Monday at 8 o'clock, we have Market Mondays. Oh, thank you to Ian 23136 on the super chat. Appreciate it. How should I decide? All right, we got to answer this one question. We got to show the super chat people. I'm investing in 7 stocks, but I can't buy a share of each every month. How should I decide where to increase or rotate? So I guess the dollar cost averaging, but like let's say it's Amazon, they might not have enough to buy Amazon every single month. So how do they decide like which stock they should put money into, or maybe an index fund is the best way to go for that, or what's your thoughts?
Yeah, you got to do it how basketball general managers do. You got to pay the best ones first, and then work your way down to the scrubs. So the ones that are giving you the best gains, put your money into first, and then work your way down.
So what do you feel about this? Because I used to do this back in my crypto days, where I used to put money into the worst performing ones. Like I had 10 coins at that time, but 10 stocks. The ones that's like really dragging, those are the ones that I put money in, assuming that it's a good company and it's discounted more than the other ones.
I want to put my money in the winners. So Apple, Amazon, Tesla. I mean, and the only reason like I've been saying that is no different than hooping. Like if I can give you 5 balling ass players, which you pay them 10 or 15, it's like the big 3 theory that Miami did. It's like, would you get 3 players and pay them a ton of money and try and win, or you gonna play? Not saying Jimmy Butler isn't a superstar, but like
no, don't do that.
He won, but isn't like Jimmy Butler's like a star, but he's not a superstar. Right. So if you're putting money into ones that are dragging, I get it, but the ones that are going to be quality are going to be quality. Like Tesla came down from 900, fell back to 300, now it's back at 6. There's a reason for that. Like they're going to travel back up to high prices. So put it into the quality ones first, and then work your way.
Appreciate that. So yeah, so Market Mondays, every single Monday with Ian, we're gonna be going over different topics and we're gonna be answering questions. EYL University members have Zoom access. Everybody else can ask questions on YouTube. So get your questions ready. But as Ian said, the most important thing is to take action, because it's great to get information. It's great to, watch and get courses and things of that nature. But if you don't actually execute,
application, man.
Yeah, you gotta get in the game. You gotta get in the game.
I want y'all to be Skip Bayless. And I said this past week. Skip knows everything about, shout out to Skip. Skip knows everything about basketball, but could not hoop. I don't want to turn this into a Tupac Biggie, like who's better than LeBron and Michael, because talking doesn't bring us any value. It's good to debate, it's fun, we get our jokes off, but you have to execute. You have to execute. Because like the people that argue the most about stocks and investing, it's a different ball game when you say, well, show me what's in your portfolio, show me what's in your account. Actually hop up and trade is different. So take action, and then it's easier to say, well, I know that. Just like the young lady who said, I bought Delta at 36 and it slid back down. I'm like, that's why I was trying to scream, no Delta yet, not until flights take off. So take action and everything will be a lot easier. Everything that we want in life, especially for the man, we can get it if we take the right amount of action. Because if you bought a ton, and I know you guys are worried about what if the market crashes, but if you bought from 2008 to 2020, you could have took your money out and you would have been sitting on 800, 900% in quality companies. Google went up 1,500% in a 10-year run. Apple went up 1,200%. Like, that is the real flip. Like, holding there for 10 years in a quality company, you'll be A-okay.
There you have it.
It is, man.
So I'll give the rundown of our week schedule. So we got a crazy week this week.
Still working.
On Thursday,
Always working.
Thursday at 8 o'clock, we're doing a YouTube live with MG the mortgage guy, and that's going to talk about the state of real estate. Everybody wants to know about real estate, so the state of real estate, commercial real estate, everything you need to know about real estate. I'm looking forward to that. It's going to be crazy. And then for our private real estate Facebook group, MG the mortgage guy is doing a 1 o'clock call with only the members of the Facebook group.
Yeah.
And then you guys got a book movie club.
We got the movie club starting. We are probably going to launch that tomorrow. Everything's ready. We got the movie. We got the assessment.
No, it's launched already.
Well, no, he didn't put it out for the public, the group to.
He did.
He put it today?
He put it in the group chat.
All right, so that's out. We're actually going to have a Zoom chat this weekend, Sunday, to go over the movie and answer the discussion questions. It's going to be live. It's going to be like a virtual party based around the movie, The Big Short. So make sure y'all tune in for that. That's going to be crazy. It's going to be over 50 to 100 people in there, man. So this is going to be our virtual party, not drinking and having happy hour. We're going to be talking real estate, and we're going to be talking a movie that can change your life.
Yeah, so Ian, what we did for our private real estate group is that, people have book clubs. So we're going to have a book club. We're going to have a movie club too. So the movie for this week, we assigned it for everybody in the real estate group is The Big Short. And then we got, like you said, we're going to have like a talk about it party on Sunday, and everybody's going to come. And it's like, what did you learn? And then people's going to come and like give this and discuss. So we got to use our quarantine time.
We have to.
For positivity and not just, it's a lot of entertainment going on with TikTok and Tory Lanez, and I love all that, but got to be balanced in life.
Yeah.
And 2 years, we've been entertainment not taking advantage of this opportunity. Real estate too, take a full advantage. It's not scary, especially because in 2020, it's different than 2008. You couldn't reach out to anybody who was making any money for free. Like, I was begging people in Atlanta to meet and having to buy like dinner for 4 people to get any insight. And some of the insight was bullshit. Like, in hindsight, it's like, you just finessed me out of dinner because you wanted to go out. Time, take action, ask questions. And most of you know, when you guys ask me a question, I'm not even selling you nothing. Like, a lot of you can like, hey, can I join? Hey, bro, the sale over, man. I'm sorry. Like, ask questions, and to be able to talk to me, Matt, Rashad, like Troy, like these are people who have decades of experience that we're giving you for free. Just take it and execute, because I promise you, when 2022 comes, you're gonna be like, I cannot believe I didn't take full advantage of this. I can't believe it.
And Ian, all the information for Ian's programs are, once again, it's in the description of this YouTube. The sale is over, so sorry guys. As of right now, the sale is over. So the next time a sale comes about, if you're interested, take action. Let that be a lesson.
Thanks, Daniel. I seen your message. We're gonna take care of that as soon as we get off this. I'm gonna go to the lab and we're gonna take care of that for you.
Yeah. So and then once again, we got the discount EYL 149.
Yeah.
We'll be back with Ian on Monday. Next Monday.
Busy. Earners, y'all gonna be with us all week. So a lot of information is being given out.
There's a lot going on. So tell a friend to tell a friend. Let's make this the #1 show on YouTube for stock market investing and investing period. Let's really blow this thing up. Ian,
share with your friends, please. I appreciate you all.
Anything that you want to tell the people before we cut it off?
I love you guys. Buy quality stocks, execute. The only thing that's stopping you from doing it is you taking the time to just go on Robinhood or TD Ameritrade, hit the button. I've already told you, and the things I'm telling you to buy, I'm in. The things I'm telling you to stay away from, I know to stay away from. Just take that. Don't sit here and listen. This is not church. We'll have church on Sunday. I want you to execute this week. I don't want to turn this into like a praise and worship thing, because a lot of prayers that we want comes when we take action. I'm telling you. And I was in church like crazy when I was a kid. A lot of my prayers came true when I took action.
Frederick Douglass, I saw a quote today. Frederick Douglass said, I prayed for 20 years and my prayers only started to come true when I started to pray with my legs.
That's deep. That's real. That is real.
There you have it. And then your Instagram handle, The Master Investor on Instagram, right?
Yes.
And then on Twitter, is it the same thing on Twitter?
_Master Investor. And then I'll be having Twitter Tuesday, so I'll probably put out like 50 gems tomorrow at like 7 o'clock.
Just 50 clips.
I'm gonna throw off 50.
50 clips.
That's how he's feeling today.
Yeah.
All right. Well, this is a pleasure. I'm looking forward to this Market Monday. Thank you for everybody that has tuned in and made this a successful launch to our first ever Market Mondays. Stay in tune, stay in contact.
Yeah. Earners, y'all were amazing today. YouTube, shout out to y'all. EYL, we got episode number 76.
76
dropping tomorrow.
75.
75 dropping tomorrow.
And so Ian, we'll talk to you, bro.
Thank you. Love y'all. Y'all have a good night.
You too.
All right, love is love, y'all.